Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 19th, 2023, and we may be in for some fireworks. Okay, we may be in for some fireworks. As far as the analysis is concerned, that's what I see. I know a lot of people are saying, could go up, could go down. We're not really confident. But here's where, real careful reads on price action really pay off, okay? Because for most people, this doesn't really make much sense. But for us, reading consolidation reversal channels, understanding price action gives you a bit of confidence to know what's likely to come next, okay? So obviously we're going to look at the Bitcoin price, we're going to look at our altcoins, but we're also going to look at Bitcoin dominance and why Altseason or altcoin season may technically have begun today. Okay, I'm gonna show you why that is. If that all interests you, then definitely stay tuned. Hope you're all well. It is kind of rainy and cloudy in the DC metro area. Okay, today I have my microphone unmuted, so you should be able to hear me. Alright, let's get started. So looking at Bitcoin, let's start off with Bitcoin, okay? The big mystery that you will hear most crypto YouTubers talk about, most analysts talk about, is what this is, okay? And what most people do is they can't really make much sense of the price action, okay? Not many people are comfortable reading price action. So they resort to their momentum indicators, okay? Like this momentum indicator, stochastic RSI, or some sort of RSI, something like that, right? And very simply, you see this purple band right here on the stochastic RSI indicator. It's an indicator showing you that anything above this purple band is overbought, anything below is oversold. I.e., when you're up here, you're likely to come down, and the price is likely to come down with it. When you're down here, you're likely to go up, and the price is likely to go up with it. Okay, that is the rudimentary read that most people have on the markets. This is why most analysts, most crypto YouTubers, most speculators are telling you they're waiting for a dip down before a run up. Okay, and I've been saying that when we're in impulsive price action, when we're in this mode, okay, let me go back. Let's go on the 4-hourly actually. There we go. When we're in this mode right here, what you're going to see is a lot of people, they're going to do one of two things. Either they are going to think, oh, it's gotta retrace at some point, and they're going to wait for the retrace and never going to get in, okay, and it's just going to keep going. And obviously nothing goes in a straight line, even an impulsive move. So ever so often you're going to get these intra-wave corrections, but they're going to read the intra-wave corrections, or misread rather, the intra-wave corrections as reversals or as distributions, okay? So they're going to do something goofy like that. So they're either never going to get in, or they're going to keep trying to short these intra-wave corrections and keep adding to shorts and not only miss the move, but get wrecked by it, okay? One of two things. Very few people are just going to take the trade and wait. Very few people. And this, actually, most people who are going to do that buy on spot. They just bought for some reason, and they just so happen to be in the trade, and unbeknownst to them, they're doing exactly what you should do with an impulsive wave, either up or down. You just ride it. All right, obviously the impulsive wave to the downside, you ride it by shorting. But here, when you're going up, you can just buy spot. You don't have to, trade on leverage or margin or whatever. and you just wait until this runs its course on a high time frame. Okay, very few people are going to do that. And one of the main reasons, I thought of this morning. One of the main reasons very few people buy and hold, or actually have an analysis about the market that's consistent and just says, yeah, we're still in an uptrend, this is an interwave correction, nothing's changed, is it doesn't make for good, it's not sensational, right? A lot of, and I'm saying all of this, let's be clear, because it may be helpful for those of you listening who may think, well, Dean, you've been saying the same thing kind of for a while, and some of these other channels, they're telling us when it's going up and down, which may be more helpful, and I leave you to be the judge of that. But honestly, if somebody's analyzing this and just says it's up, even when we do something like this, that's a lot more useful because we go more up than we go down or correct down, okay? But that isn't really entertaining. And so a lot of these channels with a lot of followers, what they do is they go on a small time frame. Not all, but a lot of them. They go on, especially those that are focused on trading and chart analysis, okay? They go on a small time frame and they're going to talk to you about this move and that move and then that move and that move and that move and that move, and there is no discussion as to how important each and every one of these moves are. There's no like, okay, we're gonna go down, but it doesn't matter because we're still in an uptrend. It's I'm getting into shorts, and now I'm gonna get into a long, and I'm gonna get into a short. It's hard to keep perspective, but again, it's not their fault. It's yours if you trade this way, or if you think of the market this way. Zoom out, look at the trend, isolate the trend. Remember, when you're in a sideways market, and we've been in the sideways market for the past 300 plus days, there is no trend. So that way of thinking, that mentality, let's talk about the up move and let's talk about the down move, and it's all the same. Like it's just as valid, it's just as relevant, right? Because the market is sideways. When your market's trending, you want to focus on the trend, and you just want to watch out for the intrawave corrections, but you don't focus on them, especially from a trading vantage. So I hope that helps. Again, not to disparage any of my colleagues in cryptocurrency and technical analysis on YouTube. It's just for you, the consumer, the listener, the trader, think about the analysis. Think about what you're doing. Think about why you're doing what trade. And a good trader typically doesn't trade every day, right? Typically doesn't have a new plan every day, right? If you listen to a lot of these crypto YouTubers, I mean, I swear, the plan changes by the time frame. Like, oh, the hourly looks bearish, and this indicator is showing me the 4 hourly looks like this and like that. It's like there is no common outlook. There's no sound, unified outlook on the market. And that is a recipe for failure if you really want to make money. You don't take a bunch of trades. Typically, obviously, there's some people that do that, and they're perfectly fine, and they're doing really well. I think that is a rarity. Typically, the fewer the trades and the more kind of, if you can ride a trend, it doesn't matter, like, you don't have to be you don't have to be so precise on your entries or even your exit. You can make a lot of money and you can do really well with just 1 or 2 trades, yeah? So now, what is Bitcoin doing in the short term? Because even though we're not trading this is important to know. And our skills in reading price action actually do tell us quite a bit about that. So let's talk about that. So on the hourly time frame, you can see we're still in this channel, okay? And within this channel, you can see very clearly 3 waves down that I would call, let's call it a W wave, because I want to say this is a complex correction, okay? Now, all of this is an X wave, okay? You can say it's a, you can say it's more than an X wave, right? But I want to say that it is a double 3, all right? I'm looking at all of this as an X wave, right? An intermediary wave, and now I've got my impulse Y wave, okay? So my WXY is a double 3, or it's a run-of-the-mill complex flat correction, okay? It's not ABC. When it's complex, we say WXY or WXYXZ in Elliott wave parlance. Now, it's actually not that important whether you count this as a WXY or a WXYXZ. What's important is that you recognize that it's a flat correction. It's a running flat correction. We talked about that yesterday. And that it's finished. That's what's most important. How do you know it's finished? The last wave of every the last wave of every corrective move, every corrective wave is impulsive. And at the end of this quick move down, you can see a big bounce. You can see a big wick right there. And that indicates a conclusion. That indicates a big bounce. That bounce is the end of the move, okay? So that's kind of like a tip. Usually when you see a big wick, that's price signaling exhaustion, okay? That's the move is exhausted. Now, moving on, you don't just resume the trend, okay? For those that think, okay, well, if that's it, then why didn't we just keep going up as we had been going up? It's because after every impulsive move, and I talked about this yesterday as well. I talked about this a lot on the channel. I talk about this a lot on the channel, rather. After the end of every trend, even on a small time frame, okay? And so on a small time frame, the trend was down. Impulsively down. You have to gather price. Price just doesn't move like this. You have to kind of recover from it, okay? In Elliott wave theory, we call that A-B basing. So you're essentially, because you're going up, we're absorbing the supply of this move right here. We're absorbing the final impulsive wick of this corrective pattern. And we do that through 2 degrees of AB basing and a pivot, okay? And AB basing is just, so let's go on a small time frame and look at it more precisely. And we're gonna look at this throughout the market. You can see this on altcoins as well. So you typically get an initial break of structure, right? That's the big wick that you see. That's basically price saying, okay, I'm finished going that way. Now we're going to prepare to resume the original trend, the larger degree trend, which was up, okay? So that's your A wave initial break of structure. And this may have been in 5 waves. And then you get a subsequent B wave. Every initial break of structure, every A wave has a B wave. So that initial break of structure has a counter wave, okay? So you would count that as such. Let's make it a little bigger, okay? So this is basically the channel that you're in now, that you're pretty much absorbing that supply with, okay? So 5 waves up, 3 waves down. For me, that's an initial break of structure and a counter. That's a first degree. That's, for me, a first degree of AB basing, okay? Follow that up with another 3-wave move and a subsequent 3-wave move. That's a second degree of AB basing. Now, it's it's likely. Okay, reading these is a bit tricky, but it's not a super easy, and it's not always super clear. But this, I think, is a likely read on this price action. What you get after is what we call a pivot, okay? And that's another flat correction, okay? So this looks like a 5-wave up, 3-wave move down. That's a zigzag. So this is my pivot. That's 2 degrees of AB basing and a pivot. Then you can resume your trend. That's how I'm reading this, okay? If that is correct, what we're going to see is that this channel, retest the top, and continue. Okay? So that's what I'm seeing on a small time frame. See, 15-minute time frame, looking at Bitcoin. Although this is a daily show, we look at price action, we look at what Bitcoin does on a daily time frame or intraday, right? I'm not saying trade this. If you're not already in a trade, it's kind of tough to take trades in these ranges, leverage trades, right? If you're buying spot, whatever, go on a high time frame and do your work there. But because these corrective waves, these AB bases, right? They're corrective waves, are so capricious. There's just so many different ways to print them. It's hard to say exactly what they're going to look like. And I would say for people waiting for the bottom of this channel to be tagged before continuation up, I don't know that that's necessarily going to happen based off of my read right there. Okay, so that's what I'm reading with Bitcoin. Let's just take one more altcoin and read the AB base there and see what we see, okay? Because typically what you're going to see is the market is in sync. The AB base on Bitcoin is probably going to look different than the AB base on Cardano, but you're going to have them be in the same stages. So when they do break out, they're going to break out at approximately the same time. So that's why I want to just do the same analysis, small time frame analysis, but on an altcoin. So let's go to Cardano. Okay. Again, so just to prove that we're kind of dealing with the same phenomenon. Excuse me. You had Cardano. Let's see. Sorry, let me zoom out even more. Okay, just wanted to be clear. It looks as if Cardano also printed a type of running flat correction, meaning it is something like that, where your final wave down doesn't come all the way down to the level of your initial break of structure. That's very bullish, okay? That's correcting up and to the right. That's in terms of an uptrend. When you make corrections where your flat corrections are running, that's why we call them running, right? Because they're in a haste, in a rush to correct. You have a really strong bullish trend with a lot of buy pressure forcing that final wave to be short, if you will, okay? It's not short, but you see what I mean. Because typically your flat corrections print like this, right? That last wave comes down even below that initial break of structure. So let's look at Cardano. It's a good comp, okay? Here I think we have a regular A, B, C, okay? Just from experience, I read that as an ABC, not a WXY. If I had to tell you why really quickly, it's just because of this B wave. What makes a complex correction and a different from a regular run-of-the-mill common correction is, do you see that in Bitcoin? Let's just go really quickly for teaching purposes, for learning purposes. For Bitcoin, do you see that X wave or the intermediate wave? Okay, so A wave, right, or W wave. Do you see this? It's so complex, and if you dive down into the small time frames, this is nested with one correction and another correction and another correction. It's very complex. That's why we call it complex correction. That's why I labeled that a WXY, not an ABC. But now, going back to Cardano, you see that this right here, right, that I just pointed to, is relatively straightforward. It's just a 1, 2, 3 wave move, like you would expect. Okay, and then your pivot, and then move down. Okay, so that's why this is an ABC and not a WXY. Sorry, let's go back. Okay, there we go. There we go. Okay, so ABC, right? Running flat. Now, let us look at this, because a lot of people, large following, crypto YouTubers, analysts, they don't know what the hell this is. It's a crapshoot for them. It's like, we'll wait and see. And a lot of people are jumping out of their lungs because they don't understand. They think, okay, it's probably going to break down. They have no clue, okay? But we can read this. And that is the beauty of Elliott wave theory and the idea of understanding AB bases and just understanding why price has to do that. And it always does that. On a small time frame, on a large time frame, you always see that, okay? Okay, so back to the 15-minute time frame. Now our range, our range is over here. So let's zoom into that. Okay, so before we leave this, the understanding is A, B, C, again, the last wave is always going to be an impulsive wave, okay? That's going to signal the last of the, or the final wave of the correction, okay? And then after that, you should also see that it's finalized because you get a big bounce, okay? It's not always that because you get a big bounce, the entire correction is finalized. Sometimes the correction is just going into another phase. But, you know, that's also an experience thing. You read enough of these charts, see enough of these examples, and you kind of can get when, okay, large scheme or high time frame, that's a ABC correction. This is your C wave. You could probably even count it like so. You would count this as wave 1, complex wave 2, wave 3, wave 4, wave 5. Okay, so by the guideline of alternation, in a regular impulse, if wave 2 is complex, wave 4 is relatively simple, and vice versa. Here you have your complex wave 2 and your relatively simple wave 4. I would say that is your impulse. It is a goofy impulse, I will say, because that wave 2 correction is just so much, lasted so much longer than that wave 1. It's an unorthodox impulse, but given that we're dealing with a running flat, you typically get these kinds of ending diagonals. Okay, that's what it probably is. That's why it looks unorthodox. It's not a 5-3-5-3-5. It's an ending diagonal, which is 3-3-3-3-3. So that's probably what you're dealing with here. 1, 2, 3, 1, 2, 3. That's why there's no parity in time with these two waves. 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, that gets a little complicated, but anyways, this is the last wave. Okay, so we made sense of that. Now let's focus on our consolidation reversal channel, just like we saw with Bitcoin. Okay, and this is where, you know, sometimes you're looking at Bitcoin as a proxy for the cryptocurrency markets at large, and then you want to look at an altcoin or two to see if there is some parallels that you can draw and say, okay, the market is doing something similar. Okay, so I see this as an initial break of structure right here. That's the market saying, okay, that is over, I'm finished with that. Immediately, let's bounce, okay? And that bounce is quick. Typically, it's a bounce targeting wave 4 of the previous trend. You see this 1, 2, 3, 4, 5, right? Even in the 3, 3, 3, 3, 3, you're going to find a 5-wave move. Okay, so this is the latter part of that that last wave of 3. So you can see this initial break of structure, A wave, targeted wave 4 of the previous trend, as you should expect. And now every A wave, every initial break of structure has a counter. Here is your counter. Okay, something like that. Okay, so that's my B wave. Okay, and so that's my first degree of A-B basing. Here's my second degree of A-B basing as I read it. Okay, again, as I read it, these are tricky to read. If you follow my work, you know, I always say try your best to read them, and then just track it. It's you're reading corrective waves, and they can take so many different shapes, sizes, and forms, and it can get really tricky. So don't be discouraged if you get it wrong. So for me, that's the second degree of A-B basing, and now I'm just looking for a pivot, which would be this 5-wave, 3-wave move. That's my pivot. That's my 2 degrees of A-B basing and a pivot. This should be the beginning of my impulse. And one way for me to confirm that would be that this move break the top, just like it's kind of threatening to do now. It break the top resistance of this channel and continue. Then my read here is confirmed. 2 degrees of A-B basing and a pivot. Every single time, and I mean every single time, on every time frame, you have an impulse of some sort and it's completed. Whether that impulse be the latter part of a corrective wave or a pure impulse, you need some form of A-B basing. Okay, and that A-B basing for my Wyckoff people who think in terms of Wyckoff analysis, that A-B basing, 2 degrees of A-B basing and a pivot, is a Wyckoff accumulation in an uptrend, okay, when your uptrend is starting, and it's a Wyckoff distribution in a downtrend. Do you guys understand? So that's essentially what I'm seeing. And because I did Bitcoin's A-B base, and it was in the final stages, and I did Cardano, and this is also in the final stages, I have more confidence to say that it's likely that my reads are correct. Because I looked at 2 different assets, and I got a similar result. Do you see? They don't look exactly the same, but I got a similar result. Okay? So Hakanji says, hello, your live streams are like a must now. Awesome, great. Thanks for doing this for us. My pleasure, my pleasure. I learned, just like everybody else from just, watching people on YouTube and reading a bunch of books and trading and making a bunch of mistakes. And, people sharing, even when people shared their mistakes, it helped me a great deal. And I feel like that's fun. It was fun for me to learn, and I really appreciated everybody that sort of shared their whatever they knew, no matter how much or how little. I learned from a lot of people, a lot of different people. Some traditional foreign exchange traders, some, crypto people, some people who, from my vantage now, don't know a lick about technical analysis. I learned from people, even when they made mistakes completely, I learned something. I learned something from everybody. I learned some risk management from you know what? What's his name? He makes a bunch of funny faces. German or Austrian guy. I forget his name, but he's a big YouTuber. I learned how to manage margins in leverage trades from him. Chris from what's his crypto channel? It's something whatever. But I learned a lot from a lot of different sources. So yeah, it's my pleasure. Okay, so that's what I'm seeing on the charts. That's why I'm seeing it. Now, high time frame, what does this mean? It's actually really significant because let's say, okay, we're going up, fine. That's, neither here nor there. Are we going up, a little bit and then coming right back down? Or is this going up likely to result in a big move? I think it's the latter, okay? So if we go on a daily time frame and you look at what just happened, you can see where I'm kind of getting at. You have a little bit of consolidation here, a big dump, your accumulation, right? 2 degrees of AB basing and a pivot, your markup. Now you get back to this level right here, and you do a little bit of intra-wave correction, and now you're back up and out of this. You're breaking pretty much you're breaking a very important, you can say that this resistance that we're breaking right now is the bear market resistance. I don't think that's hyperbole because you came down into this. Let's redraw that. Actually, I like the way I drew that first. It doesn't always have to be straight. Something like that. Yeah, I'm sorry. I'm a little bit of a OCD. So, here we go. What the heck is happening? Sorry. What the? I'm sorry. I don't know what is happening here. That's weird. I don't know why these. I think that's a glitch. All of a sudden, they don't draw the same as they used to. Anyway, whatever. I think they changed how you draw these. Like, they pull vertically? Why would I want to pull vertically? Okay, anyway. Look at this. You're breaking the bear market resistance here. That's how significant this is. People don't understand just how important this resistance was at 20K, okay? 2 things I want to bring up or point out. First is that, I want to redraw this. I'm sorry. I want to clean this up, and I'm going to redraw this. Because I want it clean. Because I want to, okay, there we go. And the first time, yep, it was just like that. There we go. Something like this. Something like this, yeah? This is how significant this is. Do you see that? I hope I can graphically represent, like, the importance of this move. You essentially did this. This should have been, I mean, Bitcoin dominance is important as well. But this is so significant, this could have been the thumbnail. Right here. If you look at what we did since June, and June was important because that was our orthodox low. It wasn't our nominal low. Difference between orthodox and nominal is, in technical analysis, the orthodox low, at least in Elliott wave theory. I don't know if this is true outside of Elliott wave theory. But in Elliott wave theory, what we call the orthodox low is your technical low that you set for a given move. So when you look at this channel and you look at your initial break of structure, you start counting it from your orthodox low, okay? And you say that that's the orthodox low, or the initiation of your sideways accumulation channel, okay? So that's why we call that the orthodox low. The nominal low is just the lowest point that the price went. Sometimes that's not as important as the orthodox low because you look technically at the orthodox low to understand the story price action is telling, okay? So anyway, the orthodox low was set in June, right? And from June until the end of the year, the end of December, you went up and down and up and down and up and down, okay? In what's likely 2 degrees of baby basing and a pivot, okay? What's really important is this. What do I always say about channels and channel trading? It's really simple. The bottom is support, the top is resistance, and the middle is support when you're above it, resistance when you're below it. What do you see the price doing? Exactly that. Resistance, okay, not orthodox low. Resistance, broke through resistance, retested it as support, okay, came back down, support at the midline, danced around it, came up to the top, found resistance at the top, came all the way down, found support at the bottom. Had you drawn this channel, you would have known exactly what the lows and highs were of the bear market. You would have been able to read the bear market, right? Perfectly, almost. Because your lows were defined by the bottom of this channel, okay? And what do you see here? You come up to the midline, you find it as resistance, you gather, and you finally break it. And then, what do you see here, okay? What do you see here? You're essentially, this 230 days of consolidation, reversal channel, or accumulation, if you're talking Wyckoff, or absorption of these subsequent, 400 days of drawdown, okay? You spent 400 days going down, and then you spent 230 days going sideways to accumulate all that supply. That happened, and you broke the channel. That's why this is so significant. People who do not know price action, they don't read charts well, don't understand just how significant that was. And this, the second thing I want to say about this. Remember I said yesterday, a bull market is just a series of higher highs and higher lows, proving that you're breaking previous resistances and making them support. You have to break them. You can't just meet them. You have to break them. That's what defines a trend, a bull trend. A bear trend is defined as breaking previous supports and then retesting them as resistance, okay? This is exactly what we did. We came out of this channel, and it wasn't enough just to come to the top of the channel, which was at 20,000. We did not do that. You have to run through that. You establish the trend. This is price telling you very loudly, we're going much higher, and we're going higher now. Again, reading price action is like reading a story, and the story is loud and it's clear. The clear story here is, I broke 230 days of accumulation, and I'm retesting it as support. What we've done for the past, let's zoom in. The past 1, 2, 3, 4, 5.5 days has been the most important move. This is the technical end of the bear market. Obviously, I'm a little bit I was calling for the end of the bear market here, but technically, this is the technical end of the bear market. You just RS flipped the bear market. This purple channel represents the bear market, at least the accumulation portion of the bear market, okay? You could say technically the bear market is both the drawdown and the accumulation, okay? So both the drawdown and the accumulation all together, you have like 400 days here, I think, and 230 days here, right? All together like 600 some odd days. So that technical end of the bear market is when you flip the accumulation portion as into support. And that's exactly what we did. So this is how important this is. People who are saying it could go up, could go down, literally can't read a chart. And it's not to disparage them again. It's just letting you know. It's awesome that anybody can publish anything on social media and on YouTube, and people can gain followings for no other reason than they're dynamic, or they're attractive, or they're interesting, or whatever. But if you're interested in technical analysis, you need to rely on yourself. You need to educate yourself. Just because somebody has a lot of following or a big following doesn't mean they know what they're talking about. It's as clear as anything. It's the easiest, clearest read anybody could make. This is clear as day. It's incontrovertible, right? This is the accumulation of the bear market. You broke it. You retested it as support. You will continue. The other thing is, what's the next target? I talked about this a bit yesterday. It's quite clearly, so typically when a channel breaks up or down, it typically breaks the height of the channel. Okay? So at very least, you should expect the channel to break up to the height of the channel. Okay, so I just did that in front of you. I took the height of this channel. I repositioned it to the site of breakout, which is here, and you automatically get 30K. But what did I just say? The channel, the target here was 20K, okay? But we didn't end up at 20K. We ended up at 21K, came down and rested on 20K. If 30K is the target here, it's not out of the ordinary that you break this and come back here, okay? Or even go a little higher, okay? I would say anywhere between 35 and 40K. And you're coming back to these areas. Does that make sense? That is, there's so many things that tell you, right? Just like yesterday, we didn't do this analysis. we simply looked on the higher time frame at the volume gap. And volume gap refers to the horizontal volume. Essentially, you can see there is no trading volume here. Very little trading volume. You only start to see trading volume when you get to these regions. So you may only encounter resistance around 30K. So that is one of the reasons we put this blue bar here as a target, because it's a really quick move. It's probably going to happen very, very, very quickly between where we are now, 20K and 30K, okay? And most technical analysts that I've heard on big channels are talking about 22K, max 25, Garrett Soloway, 22K, BitBoy, 22K, many people, 22K, 25K. Very few people are talking about 30K. If they're talking about 30K, they're saying maybe by the end of the year. Do your own analysis. Don't rely on people, right or wrong. Do it yourselves. You'd be surprised how little people know about actual technical analysis, right? A lot of times they're spending most of their time managing their, their sponsorships, their courses that they're selling you, their YouTube engagement, their Twitter engagement. Very little time spent actually, studying and perfecting their craft. Not everybody, but most. All right. Yeah. Conscious says people are calling this uptrend as a dead cat bounce after being down for so long. Yeah, absolutely. And that is, it is what it is, but it's quite clear what this is at this point, in my estimation. All right. We were talking about, actually, the video was titled, "This is the beginning of Altseason," or something like that, right? And I really wanted to draw your attention to this. What is this? This is the Bitcoin dominance chart. And this chart is showing a bear flag, okay? This is a run-of-the-mill textbook bear flag pattern, impulse, consolidation, right? And that consolidation right here seems to be at resistance, okay? And that resistance is an important resistance because, as you can see, the pattern is about 168 days old, okay? So 168 days, this resistance line right here, you just came up at it, and what's going to happen most likely at this point is you're going to start doing some consolidation reversal and start heading down again, okay? Why does that signify the beginning of alt season? Okay, remember, the Bitcoin dominance chart is essentially a measure of Bitcoin's dominance as opposed or against the entire crypto market cap's dominance. Okay, so if Bitcoin dominance is high, that means that it comprises a large percentage of the entire cryptocurrency market cap, and when it's rising, rather, that's typically what you get in a bear market. When Bitcoin dominance goes lower and it's showing a downtrend, an important downtrend, right? And this bear flag is significant. Yes, it's a move down, but that's not what signifies a big bull market, okay? When Bitcoin dominance trends down, that signifies a bull market, okay? What signifies a bull market here is this move right here, okay? There's so many ways to look at this, but you can see a larger move by this head and shoulders pattern breaking down, right? So this bear flag would be a breakdown of this head and shoulders pattern, or the beginning of the breakdown of this head and shoulders pattern, right, towards its target that we believe it should hit of 23.9. Okay, so that is a big deal. Okay, if you want to look at this in another way using indicators on the weekly time frame, you turn on your momentum indicator, that you can see that you are completely overbought, okay, on the momentum indicator for the weekly time frame as well as the daily time frame. Okay, so it's very likely that you get that move down here on a high time frame for Bitcoin dominance, and that move is also telling you that it's not only the beginning of the alt season but the beginning of a bull market. And I want to just be clear, and I didn't really understand this because I feel like when I first got into crypto, most people that explained this didn't really understand it themselves. But I took time myself and really ruminated and tried to figure this out. And I think I did. Any Bitcoin or any crypto bull market is synonymous with an alt season. Okay? You don't get a proper alt season where altcoins fly and, people make fortunes off of random altcoins. You don't get that outside of a bull market. Okay, Bitcoin dominance doesn't just come down willy-nilly, like trend down. Okay, you can get these little corrections, but I'm not talking about that. I'm talking about a massive trend down, like this is indicating, right, all the way to half of its value. Right, it's at 43 right now. We're targeting something in the early 20s. That you get in a bull market. So if you see Bitcoin dominance coming down, trending down, that is a bull market. That's basically what this chart is telling you, that the bull market is about to start because Bitcoin dominance just reached its peak. Right? It's just butting up against this top resistance here. If Bitcoin dominance is at its peak, that means it's going down from here. That means the bull market is just about to start, okay? And the thing I really like about looking at this chart is that it corroborates what we see in the DXY. Everything's kind of telling the same story, right? All these different charts. What do you see with the DXY? You see it's about to break down itself. You can see right here, this is another support of the DXY that it's about to break. Okay, it broke this vertical support, right? Or diagonal support, rather. And now it's on a horizontal support that is just about to break. And that is also a big, big deal and an indication that the bull market is starting in earnest, or it's the beginning of the bull market, right? So all of that is really interesting. And that's pretty much the story, right? So, a lot of people are going to be tentative and unsure about where we are now. But if you really do the analysis and if you really think about it, there is no better buying opportunity, not financial advice. There literally is no better buying opportunity than where we're at here. Can we retest this? Yeah, sure. You can retest this. But still, on a very small time frame, this is what you're looking at. You're basically retested the top of the bear market accumulation once, twice. Maybe you do it a third time before you leave. In which case, my AB base read was a little off, but essentially you're looking at a major move, because everything that you just did here was very, very difficult. Actually, it looks like we moved really quickly, and it was an easy move from where we were down here at 16.5 to 20K, but that was essentially cutting through all this price action, all these orders. If you thought that was quick, wait till you see this move right here. Okay? So that is pretty much it for Bitcoin and what I believe Bitcoin is doing. And so at this point, we're just going to have a quick look at the altcoins, what they're doing, and then call it a stream. Okay. So we have a little bit of green on the charts. Nothing major quite yet, but I do expect these moves to happen sooner than later. Let's jump on the 4-hourly time frame. Let's check. Just gonna check my trades really quickly. Let's see. Okay, cool. All right, so let's look at these altcoins. And if you do have any altcoins you want me to have a look at, definitely tell me, and I'll have a look before jumping off. So same thing with Cardano. I see... Actually, let's go on the daily. So you can do the same analysis that we did for Bitcoin for Cardano here, right? You can treat this right here. Where is it? Where is it? Here. You can treat this right here as... I really don't like how it's acting up. You can treat this right here as an accumulation of the bear market, okay? And a lot of... You can see it right there. That's the bear market accumulation. We just broke that. Not super decisively, but we did break it. And now we just retested it as support. You RS flipped the bear market accumulation. I didn't see that before I decided to make the thumbnail and talk about Bitcoin dominance, but had I thought of that, I would have made that the topic of this live stream. But that's the cool thing about going live. Sometimes I get ideas that I didn't have before just by virtue of doing the analysis live. So I definitely benefit from all of this. By the way, just so you guys know, it's not just for you, it's for me as well. I learn a lot from just doing this every day and looking at stuff. Here it's a little less straightforward. In Algorand, you see, It's not as straightforward. And this goes back to what I was saying. It's not always the case that you look and see the same analysis, the same patterns on every asset, with every asset, right? So you kind of have to look at things independently. But yeah, it's not as clean here. But you do see some level of resistance here. Broken, retested, gone up, breaking back down with Algorand. And this is consistent support since your orthodox low in May. And you go up and you're retesting this channel right here. Okay, so that does stand. You did retest the channel. Bonk, I don't have enough trading info, but I'm really excited about this. This is it's okay. It is a shit coin in the sense that it's a small cap altcoin that hasn't really proven its worth. But I really do respect the concept and the reasoning behind this. I really do respect it. You can tell they're sincere. I would welcome anybody interested in a really, really low cap altcoin, meme coin to invest in and have fun and probably get really outsized return. Do your own research. Look at Bonk's white paper. It's only 6 pages. Very interesting. It's very convincing. It strikes me as very genuine. It's not like a scheme or a scam or a money grab or anything like that. It's just, it really seems like they're trying to do the right thing here. Okay, looking at Dent. Yeah, it's not as clean, but guys, like, these channels were just retested. You just retested. This is the perfect entry. When we talk about perfect entries, and if I'm around for next bear market, I may wait to trade. I may wait for these moves if I have the patience to trade, because they're such good entries. Like, think about it. You spend 300 days accumulating and doing all that stuff. You come up, retest, and then you're off to the races. What's coming after this, most people are not prepared for. Bull market like moves, attention grabbing like moves. And I just want to show something really quickly. I know a lot of people are interested in Wyckoff method, and this is something that I've looked at on this channel before, and I've studied a bit of Wyckoff as well. I've used it myself. My expertise is in Elliott wave theory, but I have studied Wyckoff. And if you look at the accumulation schematic, okay, you can very easily see what we're seeing right now. How do I make this bigger? Okay, whatever. I think you can see it fine. The idea of, let's see, can I mark this up? I don't know if I can mark this up, so you can't really see my cursor. Perhaps you can, perhaps you can't. But once you get above the range here with the sign of strength and the last point of supply, you're basically breaking the range to the upside and you're retesting it right here, and then you're off. That signifies the end. You're basically going from phase D to phase E, which is the mark up. Okay? So that's what I think of when I look at these channels right here. You're in phase E. Right? That's phase D. That's the sign of strength. You just boom and you're gone. That's it. Entries are far more difficult, far more challenging once that happens. Gets really volatile. A few months of that and we get the targets we've been talking about for a few hundred days, right? Those crazy targets to the upside that people can't imagine are possible. Let me erase this. Here we go. Dodo. Also, you see a nice channel. It's not as clean. Let's see. See, these are not all super easy, clean, just like Bitcoin's channel. Gotta admit. And that's the challenge of technical analysis. Sometimes you see a pattern, but you don't see the same easy pattern everywhere. Here, I think you're still in the channel. I think Dodo has yet to break out of the channel here, but it's on its way. Okay? Dogecoin. Again, it's not so easy to read. I would say this is the channel that you're looking at for Dogecoin, and this was really confusing. This big move, and your sign of strength is massive. Look at that. It's a massive sign of strength. This all is a pivot, in my estimation. Big move. It's corrective in nature, though. All of this is a counter to this. Does that make sense? If this is A, this is B. And your impulse only starts here. And you found support at that midline of the channel. And then you put in your leading diagonal. And then your wave 2. And yeah, your explosion. So it looks a little different in every single asset. But what's important is not just to look and try and see exactly what's the same pattern, but to really understand the patterns that are likely printing. So for Ethereum, I would say, yeah, the top of the channel was broken a few times, and you broke the top again for what is likely the last time in this case right here. Okay. Litecoin, same thing. Oh, people are going to be so surprised by what comes. And very few people are going to be prepared. The people who are going to be prepared are the people who just bought and are holding. They bought and they're just holding. Actually, Litecoin did this retest back in early January. And right now it's retesting the top here. RSR. Let's get rid of this. Let's see. Something like this. I would say that RSR is more at the midline here, right? Do you see? It's right below the midline. And so you're breaking above the midline, and then your next resistance is probably going to be at the top right here of that bear market accumulation. So things are still working through. But essentially, the way to play the bear market is if you could get in, if you recognize these channels and you could get in, first of all, any buy in these channels is an elite buy. Let's really get that out of the way very, very clearly, okay? Because you really won't care whether you bought here or whether you bought here or here when you hit the bull market targets. That's number one. But if you're really like circumspect and you really want elite entries, you bought anywhere in the bottom half, right, of the channel, that's an elite entry. I'm just going to say that. It's an elite entry. And I know some people may have done that, but how many people have the wherewithal to hold it for the rest of the bear market if they're on margin or leverage or even on spot? That's who really makes the life-changing wealth. Okay? The people who have the wherewithal, the perspective to say, hey, that is up by quite a bit, but I'm not touching it. I mean, I was watching BitBoy Crypto this morning, and their main trader was talking about how he took profits on his long, and it's like you're taking profit on a long at the end of the bear market. Like, that's crazy. But yeah, not everybody has a perspective. Some people, they think, okay, trading is just a series of small trades, and that's how they make money. But that's kind of a really difficult and ineffective way to make money when you're not playing the trends. Synthetics, you're right beneath the midline, so this next move is going to take you up to this area right here. Tron, this is a really nice channel. I mean, it's very nice, very clean and clear. You've been in this channel for quite some time, as you can see. This Tron is very, very clearly in A, B, C, D, E. Wait, let's count that again. Actually, we can count that properly with our tools. So what I'm counting is a triangle here, a corrective triangle. And you have 5 waves comprised of 3 wave moves. Okay? So that's your A wave. 3 waves. 3 waves in your B wave. Your C wave is probably this, like this. 1, 2, 3. Probably your D wave. Probably your E wave here. Okay? I think that's quite clear, right? That you have a triangle. Let's see, do we have a triangle tool? If not, we'll just draw it free-handed. Let's see. Triangle tool. I feel like there is one. I've seen it before. It's not the end of the world if we don't find it, but I'm pretty sure there is one. Here we go. Yeah. So this is what you've been dealing with. And look at that. So Tron is, I got into this not that long ago, but what you're breaking here is a resistance at 630 days, okay? So in a lot of assets, that accumulation was 300 days, 330 days. In Bitcoin's 230 days. This is 630 days of resistance that you just broke. That's how big, that's how important this move was right here, okay? You retest that as resistance as support, and you're off to the races. That is really significant. Lots of people, this is the problem with a lot of these analysts that are stuck on the 17-minute chart or whatever crazy time frame they're using. It doesn't matter what time frame you use, but you gotta zoom out. Because if you don't get context, trading a lot of times is context. You can be going up, but what's your target? What's likely? You know, an uptrend, 5% or 0.5% uptrend is not a 500% uptrend. This kind of price action at this time, it's all about timing. This kind of timing yields hundreds of percent moves. Whereas in 600 days, in the past 600 days, you could get some moves, but you're limited. You're confined to this structure. Do you see what I mean? You're finally breaking free. And you're likely to put in a big move that sort of actually, that dwarfs this, because this is clearly corrective in nature, right? This is an A wave, this is a B wave. You're finally going into impulse with Tron. So expect massive, head, mind-bending like moves in crypto. You can see it on the chart. The chart tells the story. You only have to read it. This is a time like no other right now. I'm not exaggerating. This is not hyperbole, right? We could be like, the past 600 days were something, but not the same. This is the move people have been waiting for. If you've been waiting for opportunity in crypto, this is it. XRP is in a similar triangle. Guys, look at that. It's not an ABCDE triangle, okay? But it's in a similar pattern as I drew out, right? With the resistance. You can see very clearly you have a move up, right? And you have a counter move that created this resistance, this triangular resistance. That's about to break, right? So this is, I mean, it's not hyperbole. This is exactly when you want to be really bullish, exactly when you want to be like, whatever crazy idea you have, and you want to make 9 figures in crypto, like, this is when you do it. Like, I'm not exaggerating. Like, you're breaking multi-hundred day resistances, 500-600 day resistances with these moves. Zilliqa, let's get back to our channel. Here, it's more, it is a bit triangular, but you can also see some channel. Here, let's see. You see that? You just broke that resistance right there with this move up. And, you know, what's more bullish than a falling channel? Nothing. In terms of pattern analysis, nothing. It's in terms of like the percentage breakout, I believe it's one of the highest breaks. It creates some of the most intense moves up. Okay, as you can see, we broke, we retested. It's gonna be really fun. It's going to be really fun, really exciting. What's going to separate people who win a little bit, because I think the magnitude of these moves, everybody's gonna win some. It's going to be hard for people not to win. The people who are going to really, really, really win out are the people with perspective to understand the high time frame nature of these moves. That it's not just you're going up here. Like, people are going to be like, oh my god, it went up 100%. And they're gonna take profit. And then they see it again. Oh my god, it went up 100%. There's no way it can keep going up. You're going to hear that. But the people who are going to really win, they have enough perspective to understand the high time frame read, and they're not going to touch anything until the end of the bull market, which is likely, between March and May. Late March, late May. Okay, that's Zilliqa. VeChain. Again, you're breaking major resistances. I think this line, I'm just going to leave it in. This is very adequate depiction of what is happening in this trend, on this high time frame move, right? For VeChain. Here, Theta, similar to VeChain, but I think you see that you're clearly under resistance, and you're about to, let's see, yeah, you're under resistance. Once you break this resistance and retest it, then it's lights out. Okay, ALTCOIN, you just retested that resistance, okay? Multi-year resistance. Multi-year resistance, broken, retested. Now you're breaking out. Matic. Matic is doing a type of consolidation reversal after after this move right here. So 3-wave move, okay? Run-of-the-mill ABC flat correction, okay? After that, you put in 2 degrees of AB basing and a pivot. So this came in the form of a zigzag, I believe, okay? So I believe what you got is an initial break of structure. You can see here, this is clearly wave 4 of the previous trend, right? You can read this 1, 2, 3, 4, 5, right? You got your initial break of structure targeting wave 4 of the previous trend just like you expected to. That's an A wave. This is a B wave. This is a subsequent A wave of the second degree. This is the B wave of the second degree. Here is your pivot. Here is your breakout. So you can see you have 2 degrees of AB basing and a pivot, but done in a very bullish way. That's Matic for you. That's my read. And yeah, this is your first impulse of the bull market, of the new bull market. So you just went up 5 waves and you retraced 3, and you're going to continue that. So I mean, these are relatively easy trades as far as, like, you know, entries and exits go, because it's kind of an easy read. You have a 5-wave structure and you have a 3-wave retrace. So all you have to do is hide your stops, hide your liquidation points below the 0.618 right here, and you're free and easy. Yeah. Very likely to be the beginning, initial bull market wave right there for Matic. DYDX. This, I think, is going to be huge in terms of a sector. Perhaps this project is going to continue to lead the sector, but decentralized trading platforms are going to be huge as crypto matures. Okay, I believe. I think we're going to move away slowly but surely from centralized trading. I'm still using centralized trading platforms, but I think that there will be a time, maybe in next bull market or the one after, where it'll be commonplace for everybody to use some sort of decentralized platform, trading platform. And here with DYDX, I think you did your 2 degrees of AB basing and a pivot, and it's basically off of this drawdown. So this is your your bear market accumulation, lasted about 330 days. Your orthodox low from May up until present day. You know, initial break of structure, A wave. I think this is I think this is your B wave of your first degree, your A wave of the second degree, B wave of the second degree, and then I think this is your pivot right here. And I think this right here is the first wave of your bull market for DYDX. Okay, and you're just coming off of the support of this channel. So this, again, they're not all this straightforward, but this is a relatively straightforward accumulation channel, relatively straightforward 5 waves up, 3 waves down move. Easy entry, easy way to hide your stops and your liquidation points. Not financial advice, but I mean, if you can take a leverage trade here, not financial advice. Again, if you don't know what you're doing, don't touch leverage. But if you do, I mean, and you leave that for a few months, that's life-changing wealth right there. And that is it. Jason, what's up, Jason? Dude, I'm a fan of your shit. Let's go set some TPs at those all-time highs and then some. I'm fully loaded up on Matic. Let's go, baby. Yeah, appreciate your work, Jason. And, you know, just going back to some of the people I learned from, you know, Jason's one of them. Used to watch his stuff all the time, and how he hedges. You know, he goes both long and short. He looks for divergences really well, right? He uses mostly market cipher, but you know, he, like I said, you use your indicators, but you also have to know how to read price action, and this guy knows how to do that. Good example. Follow Jason if you guys aren't, if you're interested in learning. But yeah, that's pretty much all I got, guys. I really appreciate it. Hope everyone's well, and taking advantage of this. I'm really excited. This is something we've been waiting for. You know, we've been here for what, 600 plus days, you know, of, you know, up and down price action in corrective modes, and now we're finally back into pure impulse. So it's gonna be fun again. But again, those of us who really zoom out, gain some perspective, we're going to make life-changing money. And by then, maybe we don't have time to trade as we do. So we'll see. Because, yeah, we got projects and we got plans for the gains. That's all I'm trying to say. All right, take care. Yeah, God bless you, Jason. All right, take care, everyone. Peace.